Hey guys, this is Stephen Lewis with the Happy Profits. We're the right place to learn how to place the right trade. So today we're going to the 14th law of trading during the 25 days of Christmas, and it is timing is everything. Profit, or when it comes to buying and selling equities with a single day trade, even a couple seconds can make a big difference between your profit and your loss. I'm sure you've lived that situation. So basically a couple things to be looking at. We're going to go over a couple things, just want to give you my impression of them. Multiple time frames. So if you're looking for a larger trend, you're looking for maybe a daily chart, maybe a 1 hour or 30 minute, which is like a swing trade version of it. And then a daily, you would maybe look at the 15. Some people use the 5. I use the 1, and sometimes even a 15-second chart, just to get that ideal entry that is showing me proof of volume and obviously activity on the stock. So using different multiple time frames will help you get the timing down, larger for broad perspective, and then for even a detail, just zoom down in your time frame. So if it's a 5-minute candle, that's 5 1 minutes. And maybe in those 5 1 minutes, there's some detail that you could have seen that showed progress, whether it's positive or negative, into your trading strategy. The next one is optimizing the time of day. Sorry about that. Is basically, after a while you start seeing parts of the day that might be good long for shorting, and it might be better for just nothing. If a stock's kind of making indecision chop, that's just retail traders and maybe not institutions that stepped in. So obviously we noticed we like a little pre-market. That's where the traders start stepping in. There's certain parts of pre-market that looks a little shortish area or bearish. And then there's certain sections of pre-market that is very bullish. And then also the open, and then maybe 2 hours after the open or less, then you see this just very dull area where if it's just stopped moving, you gotta stop trading because there's no predictable pattern. That's kind of where that sideways section of the day. So really optimizing the time of day, maybe just look at 30 charts, and I bet you'll see these time frames, and also we talk about them in our group all the time, and we do updates all the time, and I'll do recaps here as well. And then optimizing the day of the week. Well, there's some things that during the week, Mondays can be volatile. They react to weekend news and economic events. The midweek period, obviously, the midways be more stable, maybe present traders with more consistent trading patterns. That's all I'm really looking for, is a pattern. If I cannot see it, then I'm making it up. So that's like a big thing. And then Friday, again, at the very end of the week, is very experienced, increased volatility. So, skillful day traders know which days to trade. And, if you don't like certain sections and it's too fast for you to think, just find a certain section of time so you can or day in this situation to optimize the day of the week. Got a couple more categories. Profit taking. When to actually take the profit is when to exit a trade. When nobody wants to close a winning position too early, I don't personally care, because, when I look at a stock after a while, I see probably 20 decent moves that I know. And so sometimes I'll stay on one stock the whole day, not the stocks like the big 7, because, I do like momentum trades, because people are always fighting the bulls and the bears. And if you can watch certain levels, very key, around support, or, be a little skeptical at resistance, then I think you'll be just a lot more consistent trader, and you'll be obviously able to take more profit. Premature trading, sometimes entering trades too early is damaging to your account, just as well as entering too late. Sometimes you feel like you're chasing a stock and then it runs more, and then the next time you enter too early, and you can just have a lot of missed timing for a few minutes, can turn one into a loser. So just watching the trend. I like to watch the tape. That's where I can kind of see a lot more trading happen at certain levels. I don't trade the absolute bottom. I know where supposedly the absolute bottom is, but I still like proof. And proof to me is, it just has to keep making the upward momentum, or if I'm shorting, downward. So I don't have to psych myself up or do something special mentally. I look through the scope, get my target ins, crosshairs, and kill my enemy. That's Chris Kyle basically just saying, line up your timing, try not to premature trade, and then just also look at the charts where they trade best for your style of trading. So y'all have a great one. That is the 14th law of the 25 days of Christmas and day trading rules. Y'all have a good one. Thank you so much.